Hello everyone, Paul here from the PIN Academy. So we have been receiving a lot of inboxes with different issues. So today I want to address a few issues, 1 to 3 issues that maybe is stopping most of us from being consistent, right? Most of us make profits today, and then the rest of the days we lose the profits and even go into negatives, right? Or our profits reduce, we don't know how to manage them. So in this video, I want to address a few things using small time frames because we focus so much on big time frames on most of the videos. So we think most of you actually think we don't use small time frames. No, we actually use them because they are very important. How are they important? We take trades from these very small time frames. I mean H4 and below, right? That's why we take our entries from. And also one of the most important things in trading is what we call trade management. I don't know if most of you do this thing, what that thing called trade management. If you don't do trade management, it's going to be very hard to be consistent. So when you talk about trade management, we do it in small time frames. By small time frames, I mean H4 and below, those entry time frames that we use take trades, right? So if you have an issue of not being able to hold trades, you do analysis, but you can't hold trades to your targets, right? This video, at the end of this video, you should be able to have solved that. Then also, if you do not know when the trade has become good or it is good, sorry, or it has become bad, this video is right for you, right? And also, you don't know if the market is making a reversal or it's just making a pullback to continue the direction in which you're trading. This is the right video. So make sure you watch until the end. And also, if you're new, make sure you subscribe. And also, don't forget to give us the like so that many people can watch this video. I believe it's going to be very key because trade management is very important and most of us don't know how to do it. So without wasting time, I'm going to use an example of a trade that we did share with you guys. And also we did share the trade management setup, but most people did not know that actually that's a trade management setup. So I'm going to start from how we did the analysis. When we did analysis like this, we came to weekly and we say that the market has retraced up to this level here. You guys can just check the analysis, the original analysis on our social media. That's Instagram, TikTok. The link is in the description. Just check the link tree. So we said that we have a market that made a lower high, low. So we broke down to come and retest here. So the price had reached this previous support, which is now a resistance, and we're expecting the price to go lower. And we set our target. Our first target was exactly this low here, right? Was this low. And then our second target was gotten from this left-hand side. Let me just increase the candle size here so that you can be able to see. Our second target was gotten from this side. Why? Because we say that this area here had not been tested. I'm just going to mark it for you, this area here. And also, we marked this area here, right? So these are the levels that we did have. Let me just adjust it well. These are the levels that we did have. So when you go back this side, you can clearly observe this is the setup that we have. Then we went down to daily and we said that this area here, when we adjusted, had not touched price properly. Then price came and had a double top here. You can just confirm that with the previous analysis. Then we expected price to, for intraday, we had a target here before for this reaction here. You can see the market came and reacted, right? Then continued down. This was our target here. And also the ultimatum target was this area here. So which price has reached. But I know us going up to down here, it's very hard for most of the traders to handle and be able to be in the trade until this point, right? So where do we do our trade management from? Like we have said, H4 and below. Now, I'm going to use H4 because it's my favorite time frame that I use for taking trades. And also it's that I use mostly. Now, just for recap, we had a market that created a high, higher low, high, higher low, high, higher low, high. So if you remember the explanation very well, we said that we wanted the market to come and react to this area here before we can take our trade, to react to this area and then break it before we can take our trade. But if you can observe that condition was not fulfilled here, then price came back and reacted here. But the way it broke below here, it reacted, condition 1 passed, but the second condition was not passed because the breakout was not good. Even here, when we came back here, excuse me, the breakout was not good here. So what did we do? We have already reacted. We are looking for the second condition to take our trade. So we had to just extend, and the market met that condition from around here, right? That's when we took our entry. Now when the market met our condition, it means that from here, this is where our move started up to the target. So it means that from here, you should be managing your trade to see that as the market change trend, am I still going to be able to hold? Are my emotions still correct? Are the rules still in play? The most important thing are the rules, because Since the market has changed trend now from being an uptrend to now a downtrend, it means that the condition that we should be observing is lower low, lower high, lower low, lower high, lower low, lower high. This is what we want to see. The moment the market changes this, we know that the market is reversing. That's the point I mentioned at the start that if you're able to hold trade, you should know that as the market reversed or it's just making a pullback, you should be able to know that. And also, you should be able to know if the trade has become good, has become bad, or it's still good, right? So it's what we're going to be looking at from this point onward. So let me just clear this. Now, here we know that the market has changed. Now, what am I going to be doing? I know that I'm already in a downtrend. So I'm just going to use the whole of this move from down here. So sorry, from up here up to down here. So we're going to start together. I'm just going to change the color. So this is a low that the market created previously. I'm just going to change the color to green. I love using green in small time frames because it's a bit transparent, right? I can see through candles. Now, you can see the market created for us a low, lower high, then we created a low, right? Now, here we're recapping a topic that most of you ignore. I know long topics, when I'm making long topics and all long videos, they seem a bit boring, and our editing is not like for other people, right? We are traders. I don't know how to edit, and also we have very people on the team that can edit as perfect as most people edit, right? So I know sometimes people don't watch through the videos, you miss out key areas, key aspects, right, to the explanations. So the market made a low, lower high, low, lower high. And then, so since this area retested, it means it's a key area. So I'm just going to also extend it, right? Then another point that the market also gave us a retest to this area here is this area here. Are we together? Also, we had this market retesting this point, making it a key area. Then it gave us a double retest here. But this point is that which gave us a retest to this key significant area that we identified, right? So this is like a false breakout, and the market came and retested this point. That's why you see the price after it's confirming here, the market came and gave us a weak momentum into this area. Just rewind backwards. You're going to see that I mentioned this is where we confirmed from to show that this is a key area. This is where the market, this area is where the market confirmed from. So it gave us a weak momentum into this area, and then you can see the market has just been. It went smoothly into our targets, right? So you can see the market broke this point and retested. Are we together? But then also, this is not a very significant area, but you can see it was giving us equal highs, right? So if you want, you can also mark it because it can act as your target when the market reverses to start buying, right? So you can see we have a level that gave us, when it was coming to test here, it gave like a false breakout and we failed to touch it, right? So meaning that also this area is very key. Are you observing here? You can see also price was holding it as support, was being held here as support, right? Then instead of coming to stop here, the price gave like a false breakout, meaning this area here should not be ignored. Are we together? So you can clearly observe we still have a low, lower high, low, lower high. So it gave us equal highs and made a low, lower high, low, equal highs. But you can see these equal highs are lower than these equal highs. So it means that we are still moving down. So meaning if you're swinging, it means that you should be confident because the market is still making the movement that we talked about, lower lows and lower highs, right? Don't forget this. The moment we changed, now we know that we need to only be spotting lower lows and lower highs. Are we together? So we continue. Now, I'm just going to mark also more lows. Now again, what happened is which areas gave us a retest to this key area here? We have this level that gave us that retest. So I'm just going to mark it. We have this area here. You can see the market broke below and came and retested this point here. I'm just going to adjust it to this. Let me just adjust it here. Right. We have this area that the market broke, and then we came and retested, right? Then also it means also this area is a key area because it gave us a retest to this point very fast before this one. So the price again came back and gave us equal highs here. But if you to observe, this is a low, lower high, low. Then the price again came and gave us equal highs here, right? Equal highs. But remember, we had a turning point here that was key. But you can see that the price did not test. It's just like this one here, right? So we have that point. Then which one gave us this push to make equal highs? You can mark this because it's done which gave us to give to that equal high. So the price broke again and retested it. Then also you can mark the low here. You can see, excuse me, price broke and retested it. Again, price broke and retested it. You can see again which low has given us this retest. It is this low here, right? So you can clearly observe the market still making a downtrend. Are we together? So now we have observed that we're still making lower lows and lower highs until we reached our destination. So meaning that in this case, if you understand the rule of us making lows and lower highs, you could have held the trade. But then that's the rule being fulfilled. But then we're saying that how do you know this trade is still good? Because a lot of emotions come into us here as we're still holding here, right? This happens even in small time frames like minute 15. What I'm showing you here, just I've preferred to use H4. But what I'm showing you here happens in any time frame that you use, either minute 1, minute 5, minute 15. So don't say, he's just using H4. No, these same concepts apply to all the time frames. As long as you're in your entry time frames, the small time frames, H4 and below, these same principles apply, right? So in this case, the rules have been fulfilled and you could have held up to down there. But also, to make your chart clean that you can use for the future use, I'm just going to delete this point because it was fully tested. I'm going to delete this point because it was fully tested. Now I'm going to leave this black one because you can see we had the false breakout, right? Then also I'm going to delete this one because the market fully tested it. I'm also going to delete this one because the market fully tested it. But then I'm going to leave this one because we have a false breakout. Are we together? The market gave us, the market gave us this low, lower low, lower high, right? Then we push down. But the market again gave us like a false breakout. This same scenario here is the same as this one here. Are we together? So I'm just going to leave it there. And then this one was properly tested. I will delete it. This one was properly tested. I will delete it. This one was properly tested. I will delete it. I can also delete these black lines because they were targets, right? So currently, we are going to just leave the last lower high because it will help us in identifying change of trend. Now, the moment the market changes trend and starts pushing higher, it means that we have two important key areas. We have this key area and this key area. Now, what am I going to use them for? Those of you say that I can't hold my trades, I can't do what. Now, these are the targets. These are the areas that can act as your targets. You know that the price has to come back and test those levels. Now, if the price tests these levels is when now we can go back to the structure time frame. By structure time frame, I mean where you're getting from what to trade, like the Ws, the trending markets, right? Or head and shoulders, whatever order block, but the higher time frame that you're using to give you a reason to trade. That's what I mean, the structure time frame. By structure, it's like the skeleton you're trading. The reason why you're saying that I want to buy, the reason why you're saying that I want to sell, that's that time frame that gives you that. It may not be daily, it may not be weekly, but for us, we like using daily and weekly, right? So if for you using H4, it's okay. You go back to that time frame and check, right? After testing all this, if the structures changed after testing this, that it's now bullish, maybe in the process we have created a W in daily, then you can say, of course, I expect a retracement here before we continue higher or make double top or even make a lower high and continue lower. But after testing that. So when you know these rules, it's going to be easier for you to do what we call trade management. And also it's going to be easier for you to hold your trades. Are we together? So here you'll be able to identify that the market actually may just be making a pullback just to this area or even just to this area before continuing lower. Or the market, if the structure time frame changes structure from bearish to bullish, or the market has actually changed the structure. Are we together? So all this, you don't do it in bigger time frames. You do it in your entry time frame where you take your trade from. I'm using H4 because I take my trades in H4. I mark my important levels in H4. Are we together? So this will help you to hold on to your trades until your targets because you're following the rules. Since we're in a downtrend, you know that since the market is still making lows and lower highs, we are still in a downtrend. Then two, the market has not given us a change of trend. It has just left maybe untested levels up here. If I come to test them, it doesn't mean that now I'm starting a bullish movement to start looking for any buys, but it can tell me that I can look for buys up to this area here, and these ones act as my target. And then when I confirm in my structure time frame that it has turned into a bullish structure, I'm just using this example. This is a bearish move now. If I confirm that now after pushing to retest this area and this area, that we have now turned into a bullish structure, then I can start looking for buys. But if the structure is still bearish, I'll again use this same movement that we used to come and test these levels to wait for a change of trend. The same way we did here. This is the same thing, right? If it gives us a change of trend like here, around here, then we can take our trade to continue even lower because overall, V75 is still bearish on a long period of time. You can see, I think ever since 2022 or 2021, it has been bearish. Let me just show you on a bigger time frame here. Let me just go to weekly. Actually, since 2022 Feb, right? It has been bearish. You can observe, clearly bearish. So unless these structure timeframes become bullish, we cannot start looking for buys unless we know that. How can we start looking for buys? We can only look for buys when it is midterm, like what I've just showed you here. We can only look for buys to come and retest these levels here. Are you getting it? To come and retest these levels and these levels, those levels that are not tested. But overall, you've seen that the structure or the order flow is bearish, right? So this is what I want to share with you guys because it answers the question of I'm struggling to hold my trades at my target. It's because we're not doing trade management. How do I tell if the trade has become bad or it's still good? Because of this, you know that the market is still trending downwards. If it's making equal highs and equal lows, but as long as the equal lows are lower than the previous high, it means we're still continuing down. I'm just using this example here. Or even if it is in the bullish market, as long as the higher lows, the equal higher lows are still higher than the previous higher low, it means that you're still in an uptrend. Are we together? Then you know that the trade is still good. If it changes trend and, for example, it comes and retests all these levels and you're still holding, maybe you entered your trade from around here, market has tested all this, and you see the structure is now bullish, right? And everything is turning into bullish. All your confidence that becoming bullish, you know that, hey, this trade is bad. Let me take out maybe some small profits. Since I've entered from here, I can close these small profits up to here or the ones up to here. You know that I'll watch it and see how I can go, how I can wait for the next opportunity, right? Then also, it also helps you to determine that the market has reversed or it's just making a pullback. For example, this is not a clear reversal that we're now bullish. This is just a pullback to retest these untested levels in case the market is to make them. I'm just using this as an example, right? The market has not changed trend. Still very bearish. You can see lower, low, lower, high, lower, low, lower, high. It can still continue lower, low, lower, high. But the moment it starts making higher highs and higher lows, you know that I'm targeting this area. If it breaks this area, I'm targeting this area. And on V75, these are very big. It looks small, but it's a very big difference. It could have a very good count of pips here. For example, if I measure from here to here, you can see this is about 900 pips, right? So from here, if it is to confirm around here to here, this is about 1,200 pips. Are you seeing? So this is a very big distance in the synthetic index of V75. Apply the same concept to whatever you're trading, whether crypto, stocks, or forex. I'm just using whatever we teach you here, you can apply to whatever type of market that you trade, right? So that is it. I hope you found value out of it. Do not forget to subscribe and like the video. You can even share to people, right? Have a great time.